Behind every monetary policy decision lies a story of strategy, data, consumer behavior, and economic impact.
Achieving macroeconomic stability requires sustained vigilance and a proactive monetary policy stance. Our focus must remain on price stability, the planned transition to an inflation targeting framework, and strategies to restore purchasing power and ease economic hardship.
Welcome to Facts Behind the Figures, the program that decodes the data and dissects the decisions shaping our economy. Beyond interest rate shifts to inflation targets, we go behind the headlines, spotlighting the rationale, the stakes, and the signals behind Central Bank of Nigeria's economic policy decisions. Not excluding your views, of course, as we navigate these economic and financial terrains. This is Facts
Behind the Figures.
Insight, analysis, clarity, facts behind the figures, where policy meets perspective.
As the year draws to a close, the Central Bank of Nigeria pauses, not just to review numbers, but to reflect on decisions, direction, and dialogue. It has been a year defined by reform, resilience, and recalibration. A year in which monetary policy was tested by global uncertainties, domestic pressures, and rising public expectations, yet remained firmly focused on stability, credibility, and long-term growth. This year-end edition of Facts Behind the Figures takes a comprehensive look at the financial year in review through leadership reflections, policy outcomes, public sentiment, and expert analysis. I am Sotechi Ebo, and welcome to the year-end review edition of Facts Behind the Figures. At the Chartered Institute of Bankers of Nigeria's annual Bankers Dinner, the Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, delivered a far-reaching reflection on the financial year, one that underscored discipline, reform, and renewed institutional purpose. In his address, the Governor highlighted the bank's unwavering mandate to achieve price stability, financial system stability, and inclusive economic growth, while strengthening confidence in Nigeria's monetary framework.
During past years, this annual gathering, midwifed by the CIBN, has become a tradition and a platform for reflection, accountability, and shared purpose. Nigeria in a shifting global landscape. Global growth continues to moderate as geopolitical tensions, supply chain realignments, and rising protectionism reshape the world economy. When this leadership team assumed office, our economy faced severe macroeconomic distortions. It is important to recall this, not for drama, but for context. The progress we so cautiously acknowledge today is meaningful only when measured against the depth of the challenges that came before it. Over the past 12 months, Nigeria's economy has transitioned from crisis management to laying the groundwork for a sustainable recovery. As we look towards 2026, our strategic priorities are clear and actionable.
The Governor's message reinforced a forward-facing vision, one rooted in transparency, policy consistency, and inclusive engagement, aligning fully with the bank's mission to foster a resilient financial system that works for all Nigerians. Throughout the year, the Monetary Policy Committee served as the engine room of Nigeria's monetary response, carefully balancing inflation control with the need to support economic activity. From interest rate decisions to liquidity management and exchange rate reforms, the MPC's actions reflected a data-driven approach to navigating both domestic and global headwinds. Each meeting reinforced the bank's commitment to clear communication, extending engagement beyond press briefings to digital platforms, live streams, and real-time public interaction. As part of its ongoing transparency drive, the Central Bank of Nigeria once again turned to the public, seeking feedback on its policies, communication, and overall performance throughout the year. Following the most recent MPC meeting, a public perception survey was conducted across the bank's social media platforms. A total of over 800 survey respondents were recorded. 75% of respondents found CBN's communication clear and timely. 79% of respondents found our communications regarding monetary policy informative and engaging. 76% of respondents believed the CBN is fulfilling its regulatory role. 65% of respondents anticipate positive economic outcomes from the MPC decisions. These responses offer valuable insights not just into public sentiment, but into how policy is understood, questioned, and received by Nigerians across sectors. Beyond the numbers, the feedback revealed recurring themes: calls for simpler, less technical explanations, stronger linkage between policy decisions and everyday impact, continued use of visual and short-form digital content, deeper engagement with youth, SMEs, and informal sector participants. The message is clear: communication matters and dialogue builds trust. Beyond digital platforms, we stepped out to hear directly from Nigerians, business owners, professionals, and everyday citizens on how monetary policy shaped their year.
Looking ahead, I believe that if these efforts continue, the economy will become more stable over next few years, and this stability can help people plan better, grow their businesses, and focus on their daily work without constant fear of sudden price.
Due to the decline of inflation on the nation, we have noticed some level of stability even in the prices of produce in the market, and there is a sharp decline in the cost of foodstuff. Fuel is also stable, and the cost of energy has reduced.
As it is, CBN is trying. We have noticed a bit stability in the Naira as it is now. So we hopefully believe that there will be much increase and stability in the near future.
The voices are diverse, but the expectations are shared: stability, clarity, and policies that translate into lived economic realities. To make sense of the year's data and decisions, we spoke with a financial analyst who examined the broader implications of monetary policy actions in 2025.
The year 2025 has been marked by resilience. The global economy kept growing, though more slowly, as conflicts, shifting supply chains, and rising protectionism created new challenges. Developed countries adjusted to slower growth, while many African economies faced tighter borrowing conditions and high prices. Oil exporters felt the impact of lower crude prices, but countries exporting gold and other minerals benefited from rising global demand. Here at home in Nigeria, the economy showed strong signs of stability after years of weak growth. Recent reforms helped shift the country from crisis response to building a more durable recovery. Economic growth reached 4.23% in the second quarter of 2025. This is the fastest we have recorded in over 4 years, and it was also above 3% in the third quarter of 2025. Inflation has been the biggest improvement. From a peak of 34.6% in November 2024, inflation fell to 16.05% by October 2025, marking an unprecedented 7 straight months of decline. This steady drop is restoring purchasing power of households and businesses alike, reflecting more consistent and disciplined economic management. The foreign exchange market also stabilized. The naira now trades between 1450 and 1500 per US dollar, with almost less than 1% margin between official and bureau exchange rates. External reserves climbed above 46 billion US dollars. This is the highest in nearly 7 years, thanks to better market conditions, stronger non-oil exports, and higher investment inflows. At the November meeting, the Monetary Policy Committee kept the main interest rate at 27% to support the ongoing decline in inflation. It also adjusted how banks borrow from and deposit funds with the central bank to better manage liquidity and monetary conditions. The prospects for 2026 are indeed encouraging, as it is clear that the reforms indeed do work. Inflation is expected to keep easing as the exchange rate and energy prices stabilizes and food supply improves. Growth should remain positive, helped by better power supply, stronger investor confidence, and improved coordination between fiscal and monetary authorities. The stock market has strengthened. Rating agencies are more optimistic, and Nigeria's recent exit from the FATF grey list has further boosted confidence in the Nigerian economy. These gains point to a steadier and more promising economic path in the year ahead for Nigeria.
As the year comes to an end, the facts behind the figures tell a compelling story of reform, responsibility, and renewed engagement. Monetary policy is not just about rates and ratios. It's about trust, communication, and shared understanding. At the Central Bank of Nigeria, the commitment remains clear: to listen, to explain, and to lead with purpose. Engagement builds understanding, and understanding builds trust. Let us keep the conversation going. I am Sotechi Ebu. See you next year.